and thanks for joining us. As we say goodbye to Evelyn, I want to welcome in Megan Brantley, the VP of Research at LikeFolio.com. Megan, looking at the data here, I'm sure that we're going to see some disappointment throughout 2020 in Nordstrom's. So I guess, are we starting to see it recover? Is it starting to come back? And whether or not it is, how is it shaping up versus its competitors and its peers? Because sometimes that's the most important question.
Yeah, you're exactly right. So when we're listening for people talking about Nordstrom, we're specifically keying in on if they're talking about shopping, not just at Nordstrom, but also Nordstrom Rack, as Evelyn pointed out. We're listening for, actually going to the store and also these digital mentions. And what we're seeing is overall weakness continuing into this quarter. I don't think that it's news that as things are shut down and as we're staying inside or avoiding social situations, that people are buying less clothes. So I don't think that this is necessarily unexpected. You can see this green line. This is the mentions of those people who are shopping with Nordstrom or Nordstrom Rack. And you can see that pacing down about 34% year over year. So I think that, this shows just this weakened demand. When you isolate digital specific mentions, those are up about 19% year over year. So I think that in this sea of, yes, less people are going to the stores, more people are turning to Nordstrom's digital platform. So that would be a potential bright spot, if you will. But overall, going into this earnings, we're not seeing a lot of uptick into the holiday season. And that's definitely something that we're a little bit concerned about.
Yeah, Megan, it's hard to really, I think if you're going to trade these names and you're going to look at these names, you got to really, it's all about the future, right? This is a comeback story, not only for the U.S. economy, but for these retailers in general. And there's some reason why this stock has gone up 100% since late September. And it's got to be, like Evelyn just reported, after two horrendous quarters, they may break even this quarter. And if they do, or if they beat that expectations, then remember, you can put up a chart and look at Nordstrom, last year, the beginning of 2020, trading $43. Well, not soon before that, it was $65. So this stock is still, even with this comeback, only about a third of its its value. And this stock with 157 million open shares isn't a very big company, right? It's pretty tiny. So their ability to have a comeback, and I think it's, based on or heavily tied to Nordstrom Rack. I think that's might be the brand that saves Nordstrom. But this is going to be the tricky thing is it's just made a big move, right? Pre-earnings. So these earnings better beat. They better impress people, or this stock could really drift back down, significantly. So this is going to be a tricky one to trade for sure, guys.
Megan, the question I have for you, I guess building on that is, obviously at LikeFolio, you're very data focused, you're data driven, you're looking at these mentions, you're looking at the consumer purchase intent mentions, and you're making a decision based off of the stock performance and revenue expectations and trying to see if there's an edge as you guys see it. But when you look at how the reactions have been in some of the peers regarding the numbers, at what point do we have to take a backward step too and look at the overall macro kind of trend shift and where things are going? Obviously, not just on e-commerce, but it looks like we're kind of seeing the light at the end of the tunnel on reopening and things like that. That really seems to be the fuel for the fire of some of these moves, particularly for Nordstrom's and maybe some of its peers. Is it possible that even if they disappoint, that overall narrative of, hey, we see the light at the end of the tunnel, stores are going to be reopened, traffic is going to come back, is enough to kind of withstand some near-term disappointment?
Oh, for sure. I think that Kevin hit the nail on the head when he talked about expectations. I think that there is, the world knows that fewer people are shopping at Nordstrom, fewer people are going to these department stores and things of that nature. So that's not necessarily unexpected. So it's just a matter of, can Nordstrom clear that bar? Our data, it definitely is leaning bearish into this earnings, but I think that there are some bright spots that investors could cling on to. I talked about those digital purchase intent mentions. Those are up about 19% year over year. You want to see that. You want to see Nordstrom successfully shifting to e-commerce. Another separator, I think, or a differentiator for Nordstrom versus its peers is happiness. Nordstrom sits at the top of happiness whenever we look at a lot of these retailers. It's 5 points higher than Dillard's and Macy's. I think that their customer service is unmatched. They're making more consumers happy. And so long term, that's the one you're going to want to bet on, right? So this is the one I think that, as Kevin maybe suggested, they are well positioned to grow into the future. And if that's the thing that investors cling on to, then absolutely that could be positive and well received long term. But short term, at least heading into this earnings, we do generate these earnings signals every time that looks at our buzz, that looks at this consumer demand, and that looks at happiness. And we definitely have a bearish lean into earnings, but I don't think that I don't think long term it's something to say that Nordstrom isn't extremely well positioned. They have the happiest consumers of the peers that we look at. So I think that would be the bright spot that could prompt a positive reaction if that's what investors cling on to.